All right. Hello and welcome, everybody. We'll get started here. And on today's topic, we're going to be chatting about not necessarily the best way, but the cheapest way. We're going to dispel a myth about costs associated to home ownership, how to get into a home. Most of the myths or thoughts out there are that costs considerably more than what we're able to get folks into in a home. So we're going to talk about what costs there are, what that approximately look like, the loan types associated to your home purchase, and then the assistance that we can reach out for in order to help with that process. And we've got our co-host, Chase Hodgson from Summit Funding. did I catch you mid-yawn? I love it. I did not do that on purpose, I promise. How you doing today, Chase?
I am awake. I promise.
Good. You doing good otherwise?
I'm doing fantastic, man. A little,
Awesome.
a little astonished at our current weather, but gonna appreciate it for what it is.
Yeah, I hear you. Well, we appreciate you jumping on today to talk folks through what it would look like to get into a home and put everybody's mind at ease compared to what they're probably currently thinking. But I got a couple quick housekeeping items here. For those of you that I haven't met yet, my name is Jerod Lee. I'm the associate broker and team lead at My Home Connection, our sponsor for today. With a little bit of a spoiler alert in regards to our topic is the perfect home buying process that we've been developing over the last couple of decades. And there's a number of tools that we've implemented into the system to help ease the process, minimize cost, and build confidence all the way from varying different reports, comprehensive relocation and lifestyle guide. We do have some secrets that we want to share with folks out there that we feel are important for you to know in the home search process. And then we do have a free no obligation consultation with our current promotion of up to $1,000. Chase and Summit are partnering with us for up to $500 on the appraisal, and we're gonna help with up to $500 on your home inspection. So with that, again, that's gonna be a little bit of a spoiler alert in regards to our conversation, but yeah, let's talk about kind of costs in a little bit of a chronological order, so people know kind of what their upfront, expenses are going to be. First of all, when you find the home and you make an offer, in that offer, one of the first things it's going to ask for is earnest money, which is that good faith contribution to the purchase of the home in order for the seller to take the home off the market, put it in a pending state, and have confidence that you're going to move forward in that purchase. In our market, there isn't a fixed number. There's a kind of a rule of thumb, or what we quite often see that sellers are receptive to going forward with the offer, and that's about 1%. So $400,000 house, roughly $4,000. That earnest money is typically going to go to title, can go to a broker or some other third party, but you can estimate about 4% going into the overall escrow process, of which doesn't mean you're necessarily going to be out all of that, and we'll get into some of those details later. But that's going to be kind of the first one that comes up. Has that been kind of your experience chronologically, Chase?
Yeah, no, it is. I think overall, clothing costs are probably more times than not closer to that 3%. Really depends. That varies depending on the purchase price, right? So that can change some things because some of the fees are, determined by that purchase price. So, but yeah, that's typically about where we're at.
Yeah, now we're going to talk about some generalities here today because there's all kinds of nuances to the process. If you get into new construction homes, we'll see 5, 10, 15, 20% down. And there's reasons why that, earnest money. And there's reasons why that would increase, which we can share with you. But really, again, we're talking about the cheapest way to get into home ownership here, not necessarily the preferred way. But, if you're trying to get into the market, we want to give you an idea of what to expect on the minimum, and then we'll talk with you through kind of the maximum as per your situation.
Yeah.
The other expense right after that's going to be close behind that is the inspection, and we're going to usually do that within a 5-day period. In the offer, we're going to identify the timeline in which we're going to, excuse me, there we go, to accomplish our due diligence period, get an inspector in, and step through that process. Probably see $350 on up, depending on the size of the home and things like that. And most inspectors will require that at the time of service within that first 5 days or a week.
And
What's
just
that?
from a buyer's perspective, Jerod, I know we've talked about this a little bit in past episodes, but for buyer's perspective, as long as we're talking about these costs and which ones are super important, or maybe some of the ones that they can avoid, through your expertise, is the inspection something you would bypass to save that $350?
I never advise waiving an inspection. And again, a little foreshadowing, we believe in it strong enough that during the perfect home buying process, we're going to contribute to that. I even encourage inspections in new construction homes, brand new homes. Builder just got it done. They've had, multiple inspections, but we need a third party looking at it for your benefit to kind of go over the home. And we've got examples of galore of people that haven't done those on new construction homes, and it's bitten them. So we always recommend that.
Yeah, it can rain and storm and snow during the construction process, and what kind of mold has that created? Yeah, absolutely. Yeah, things can be missed. You need somebody on your side for sure.
Yeah, I've even seen folks, sellers that'll do a pre-listing inspection, and the buyer needs to understand that those are usually like a subset of an inspection, an abbreviated inspection, maybe not an all-encompassing, and if they just take it at face value, I've seen people get bit with that. So you're going to have your earnest money. That's going to go into escrow. You're going to have that inspection in the first few days. And then once we get through due diligence, Chase and lenders are going to initiate or begin the initiation process of the appraisal.
Yeah.
In your experience, Chase, I'll let you speak to what those monies are and when those are typically due.
Yeah, so that industry's actually shifted a little bit over the past couple years, right? With the market, appraisal costs have gone up. I was an appraiser for about a decade in this valley, and we did it for a lot less prior to '08. So they instituted appraisal management companies to separate the appraisers from the lenders a little bit, and that added cost to the appraisals. So minimum, you're probably going to be at about $550 at this point. The majority of lenders out there this isn't everyone, this isn't across the board. Majority of lenders out there are going to require that at that time of the appraisal order. And that market shift has come within the last couple of years, just because of the amount of people that have started the process and backed out. It adds a ton of fees that don't ever get covered. So because the lender's not allowed to charge you for anything if you don't close. And then so those ancillary costs like the appraisal fee, that one is typically at this point in time due at point of inspection.
Okay, and just for us to be clear, when we talk about the perfect home buying process, we as the lender and the agent are going to contribute the values of to you at closing. So these will be costs, that you'll have during the home purchase process, and then you'll get those credited back to you. So just want to make that clear. Right. We're talking through, out of pocket expenses, and they can be more, they can be less, but we're talking about kind of generality at this point.
Mm-hmm. Yeah, absolutely.
The next item that we're gonna items, I should say, we're gonna come up with are down payment and closing costs. So, and then right behind that, I had identified loan types in the order of the least amount required for a buyer. from VA to USDA to FHA to conventional. So if you could kind of walk us through, uh, you know, obviously there's a lot of detail on those, but just in a nutshell, who qualifies for those, and then what the down requirements are. And then also note, guys, this is independent of closing costs.
Mhm. Yeah, absolutely. So, it's actually one of my favorite things to discuss because there's so much misinformation about what it costs, what it's going to be out of pocket to get in a home. And so I can't tell you how many times I've run into borrowers that are waiting for years in order to save their 3.5%, right? So there's a lot of nuance to what we're going to talk about, obviously, with the different loan types and your personal situation as a buyer. But to Jerod's point, in generality, we can kind of go over the basics for you. So, in order of least amount down, there can possibly be a tie, right? USDA and VA both allow 100% down. Um, they both
Zero down, 100% financed.
100% financing. Sorry, 100% down. Yeah.
No problem.
So yeah, 0% down, 100% financing. USDA has a unique quirk in that if the house appraises for more than what you're buying it for, you're actually able to roll in some of your closing costs. And so that's kind of unique to USDA, which is USDA is an urban development loan. Basically, think of a little more rural areas that they're trying to disperse the population of an area, right? So they want you to buy out here, and so those are the areas, and there's maps that identify where those areas are at.
So
That's go ahead.
if you're an individual that's really tight getting into a home and you're not a veteran, USDA, depending on where you're open to living, could be the next viable option.
It could be, yes, absolutely. USDA and VA with 100% financing. And then, if you have a veteran that is, there's different situations, but if you have a veteran that's been injured or exempt from the funding fee, that actually can reduce your closing costs altogether for VA borrowers. Both of those have what you would call funding fees of some sort involved with them, and there's always a it's like that, there's equal and opposite reaction to every action, right?
Right. Yep.
You need to think about 100% financing sounds amazing, but that also means that your monthly payment's going to be higher because you're financing more, right?
Yep.
And so there's always an effect. But as far as getting into something with as little out of pocket as possible, those two are great options. If you qualify for those, right? And then sorry, go ahead.
Yeah, I was just gonna chime in that for those, because that's the proverbial dilemma, right? Is I don't want to finance 100% because my payment's going to go up, or I don't like, not having some money to put down on it. But the trade-off can be if you wait to have more down, then and values of the home go up, your purchase price goes up. You're kind of in that same boat. So we kind of got to weigh the scenario of, does it make sense right now to take advantage of 100% financing or zero down to get you into home ownership so that you can begin participating in the appreciation and the equity that you pull out, such that you can put it down, because that's where a lot of home buyers down payment comes from, is their prior home. If you don't have that, you got to start somewhere.
Right, and I love that you brought that up. There is always a cost to waiting, right? There's always a cost to waiting. So weighing out those, and that's why you get with a professional that knows how to calculate that and walk you through it, right? But there's, when you talk about cost of waiting, first thing is obviously what you spoke about. The price of homes go up, right? Historically, we're looking at 4%. Nationally is about what homes appreciate every year, and so you can look at that in two different ways. You can look at, so for us in Idaho, 4% is like, we hope it's, we hope it's only that much, but what we're seeing is, closer to a 7% average, right?
Yeah, and you want to participate in that, right?
Right. That's what you look. Okay, so am I going to, this 4% appreciation, am I going to pay $20,000 more for the same house next year? Or is that $20,000 worth of equity or forced savings that I've taken advantage of because I did act now, right?
Yeah.
And so there's two sides to that coin and how you look at that. And then, on top of that, like, not just the appreciation, but typically everything else goes up. Fees can go up. It's harder to find homes. It's real estate is a funny thing, and people always try to time a market to where it's at the bottom, but it's next to impossible.
Right.
And so you need to buy when it suits you and when you have the need.
Yeah, absolutely.
Right, because then you're immediately taking advantage of all the wealth building that comes with home ownership.
Yeah. Yeah. So if we've identified that you're the person that, the sooner you get into the home ownership and you start benefiting from that, the better. You're going to have closing costs and you're going to have the other costs that we just spoke about before. And, again, we made some generalities, but we can help map that out for you in your personal situation with that initial consultation to give you a really good idea of what that's going to look like. So those are the main known 100% financing options. So let's go ahead and go to FHA and what that looks like.
So actually, the next least expensive would be conventional, right? Conventional is 3% down, and so so conventional at 3% down. That's somebody that falls into that first time home buyer category, and the first time home buyer category is actually anybody that hasn't owned in the last 3 years.
So that's a real, I'm sorry, Chase, but that's a real big one is folks need to know. It's not, have I bought before I don't qualify? It's not that, it's within the last 3 years.
Yes, correct. Yep. So if you sold your home 4 years ago, you can requalify as a first time borrower and qualify for that 3% down. If it's not 3%, right? If you have owned in the last 3 years, then you're looking at a 5% down minimum. Okay. Now, the difference between the other ones and the government loans and conventional is that your credit score and credit history are going to come more into effect and affect that interest rate much more than what the government loans, right? So that's one of the to go the conventional route, you want to make sure that your credit score is in good standing to be able to move forward on that one.
Gotcha. Yeah, and that's in line with what we talk about, that the sooner they're talking with you, they know what they qualify for, and if we need to make some changes to get you into a better loan program, then we've got some time to do that rather than finding a home and then scrambling to recover.
Absolutely. Yeah. It's sooner
we never do that, right?
Yeah. Absolutely. And then so then we go back to what you're talking about before. Then we go to FHA. FHA is more forgiving with credit history, and you're looking at a 3.5% down. So still a small amount out of pocket, right?
Yeah. So $3,500 for every $100,000 purchased. Yep. If you're using the same number purchase price, the $400,000 home.
Yep.
Right.
And then from there, just through the standard loan process, you go to there's things affect your rate. The more that you put down, that affects your interest rate, right? And then if you get into jumbo, then the majority of those are going to require 15 to 20% down, and so now you're getting into the bigger out of pocket issues, right? So, but the great thing, it's hard to explain to people how blessed we are here in Idaho, right? I mean, not just with, our surroundings and our lifestyle and all of that stuff, but we have an agency here called Idaho Housing. They consider it a bond agency, and typically every state has one. I'm licensed in 14 states at this point, and there's only one that even compares to Idaho that I work in. And so we're very, very blessed because bond agencies typically have a lot of oversight in the way that they make their money, and they run out of programs and funding and stuff like that. And Idaho Housing operates a little bit different, even though they fall into that category bond agency. They're a little more independent, and they're quite profitable. They service for, the last time I looked, they service for 7 other states surrounding us. So it's a big organization, and they're just run phenomenally. So they don't offer they don't do loans, but they offer loan products And you could kind of think of it as, kind of a quasi government agency. They're independent, but there's some subsidizing in there
Hmm.
that allows them to offer uh, programs, down payment assistance, um, you know, lower interest rates to help people get into homes.
Hmm.
And
So
so, go ahead.
I think you're going right into the down payment assistance and how they can structure that and minimize their upfront costs.
Right, exactly. And so that's one of the great things when we're, with this, episode talking about the lowest amount of cash out of pocket is through the majority of their programs, they offer down payment assistance, and there's a couple different ways that can show up on your loan. There's a forgivable second loan, right? So you have your first loan, which would be the majority of the loan.
Hmm.
So if it's a conventional loan, it'd be 97%.
Okay.
And then you have down payment assistance to help cover that 3%, right? The only regulation really is that you have to have a 0.5% of your own money into the transaction. So typically with the home prices that our first time home buyers are in, it's usually an appraisal or inspection or something like that fills the need. It's usually pretty minimal.
Yeah, and I think that's. I mean, you touched on this amazing program we have. If you're not USDA, you're not VA. Now you're talking the IHA route. 0.5%. I mean, if we think about that, $500 for every 100,000. So let's use that same $400,000 home. You're talking about $2,000.
Correct.
So if you're doing the math, you put your $4,000 worth of earnest money in escrow, and now with the IHA scenario, your down is going to be 2,000 of that.
Hmm.
You're going to have closing costs and all that. We can factor that in, but without factoring that in just yet, you're getting money back at closing.
Right.
But
Yeah.
we got closing to
Happens
cover.
quite often. Yeah, I see that happen quite often to where your earnest money is more than the 0.5% that you have to have into the transaction, and then you're getting a check back at closing, right? So, it's to go back to the types of assistance that they provide, right? And they do all the types of loans. They do conventional, USDA, FHA, so you can actually get on Idaho Housing's website and see what they offer and start to understand the programs that they have. Um, but someone like me, I work with them on a daily basis, and so I can definitely walk you through all that as well. And to go back into the different types of down payment, you have what's called a forgivable loan, and so the way that works is you would borrow 2.5%, right, of your um, well, you can borrow up to 7% in your down payment assistance, right?
Okay.
So if you don't have the money for the down at all,
Mm-hmm.
and but you have the 0.5%, it can cover everything, all your closing costs, all your down payment, as long as you have a 0.5% into it, right? So basically, the forgivable loan you would borrow whatever you need to cover the monies that you don't have, and that after so many years, that loan is forgivable, right? So if you sell your house before the term of that loan is forgiven, then it's prorated. So you have to, there's a little bit that comes out of the sale of your house to pay that back. If it goes to term, it's completely forgiven. The way that they pay for it is they increase the interest rate when you're using the forgivable second.
On the second, but the first is the
No,
norm.
no, on the forgivable loan, on the forgivable second, they increase the interest rate on the first,
Oh,
on the
okay.
entire loan, right? Because there's no interest rate on the second, it's forgivable. There's no payment due.
Gotcha.
And so they increase your overall interest rate. So typically for me, the one that I use the most and the one that seems to work the best is the second loan. And the second loan is just that, right? You have your primary that covers the majority of your loan that you're making a payment on, and then they lend you the money for down payment and closing costs, still having to have your 0.5% in,
Hmm.
and then the interest rate on that is 2% higher than what the interest rate is on your first loan,
Yeah, and that's what
right?
I was thinking about is you'll
Yep.
have your first at X interest rate and your second at Y interest rate
Right.
to the tune of 2.5% of the purchase price of the home.
Yep.
So it's a higher interest rate, but the likelihood, and I think it's is it capped at a 10-year on that second?
Uh, so it's 180 months. So
Okay.
yeah,
So the point being, I, we would recommend that you pay that off as aggressively as you can.
that's the best thing about it, right? There's no prepayment penalty. There's no anything. It helps you get into it, and then all your extra monies you can focus on that as pay it off as quickly as possible. So the way that shows up on your mortgage is you'll show two loans, and you'll have a primary payment and you'll have a secondary, right? And so that whatever that is, that 150 to 300 bucks a month you're paying extra to borrow that down payment, you can pay that back as quickly as you want to, and then your overall monthly drops by that amount as soon as it's paid off.
Yeah, yeah, absolutely. So we've talked about the upfront cost, earnest money, inspection, appraisal, and down. Let's in the different loans and what they're going to require for the downs. But let's chat real quickly about the assistance that a home buyer can receive. Let's say they're just absolutely cutting it super tight, but they want to get into home ownership. And I imagine there's a lot of specifics, but just in general, who can they reach out to get assistance with purchasing the home? Whether it's a loan or it's a gift.
Family, family. So the guidelines are interesting. There is, in situations where they say that you can use a good friend, but it has to be documentable, and then you have to deal with an underwriter that is gonna, like, how do you document that we've been friends? You know what I mean? Like, documenting a relationship is difficult, right? So the path of least resistance is always family, right? So if you have a brother, you have a mom or a dad that's willing to gift you that money, then that that helps you get it closed, right? It helps reduce the stress on you, and we see that happen a lot, especially these days as home prices go up, and parents want to see their kids win,
Yeah,
and so that's always a way to go for sure.
yeah, and it's important to know gift, not loan.
Yeah, so if it's a loan, if it's a documented loan, then that also goes into your liabilities and affects your debt to income ratio. Yeah,
Right.
so
So it's not that you can't, but
right,
your debt to income ratio is going to change because you owe somebody money,
right,
whether it's a
correct. Yeah, you have
creditor or
to.
your parents or whatever. It doesn't matter. That's money that you've got an expense for. So hopefully it's just an outright gift that you don't have to repay, and they help you get into home ownership.
Yeah, yeah, we have to document all debt and take account for all monthly payments, or monies due, and so that's it's a way to you can do it as a loan, but it does add another layer there for sure.
Yeah. So let's talk about something that I don't know that a lot of buyers are aware of, and that is seller concessions. Basically, a gift or a credit, at closing from the seller, and kind of the general guidelines. I'm sure there's a lot of specifics, but generally speaking, and guys, I'm going to preface this with it depends on what the market's doing. If it's an extreme seller's market, it's very tough to get. Sellers don't have to give away any money. They don't necessarily have to reduce the price of the home. They don't have to give out sellers concessions. But our job would be, if you're that person that is on a very tight budget and we need concessions because we don't have family or any other mechanisms, then let's try to get it from a seller. Can you speak to that, Chase, and with the different loan types?
No, absolutely. And I'm just noticing my camera's getting fuzzy for some reason. I don't know what's going on there.
Oh,
Um, Yeah, so there are seller concessions, and it really depends on your down payment, right? So with it, when you're talking about a conventional loan, how much the seller can contribute. There's laws on the how much they can contribute, right? So since we're talking about the least amount out of pocket, if you put less than 10% down, the seller can contribute 3% towards closing costs, and there's only certain fees that they can contribute to, right?
I was just going to say that's a significant distinction, is that sellers can contribute to your closing cost, not your down.
Correct.
Yeah.
Correct. Yeah, they cannot contribute to your down payment, and and so there's some nuance there as well. Like a lot of times we'll get a seller credit, and you're trying to figure out how to use it because you have you can only put it towards certain things, and the buyer has to have, so if we're going through an Idaho housing loan, the buyer has to have their minimum contribution of 0.5%, right?
Mm-hmm.
And then we have to make sure that whatever's left over can be used in areas that don't go towards the down payment.
Yeah.
So there's some nuance there, but it's like it's been big over the last year and a half, 2 years, right? There's been a lot of seller concessions, and there's been a lot of opportunity for buyers to get out there and take advantage of those. So, and with FHA is a little bit different, right? So FHA, you can use up to, I'm trying to remember, it's up to 6% of seller contribution, which can be a lot of money. And then as that percentage goes up, it gets harder and harder to use it in the transaction.
Yeah, so I kind of interrupted you there, but it's important for our viewers to note is depending on the amount with different loans that you put down could determine how much a seller could actually give you.
Correct.
So it's important to note what that is, because if you expect them to cover the majority, if not all, of your closing costs, that's going to be dependent on what your
Correct.
skin in the game is.
Yeah, if you're in a conventional loan and you're only like I said, you're only putting 10% down, then 3% of the sales price is the most that they can contribute, right? And so then as that goes up, if you put there's three different levels, and you're 25% down or more, you can 9%, and between 25 and 10, you're at 6% on a conventional loan. On an FHA loan, you just get 6%.
Yeah. So, just to give you an idea of what we're talking about here, and that is, if you're doing the math, like let's just use the 3% scenario that a seller can contribute on that same $400,000 home. You're talking about they can contribute to your purchase $12,000.
Correct.
Obviously closing costs can change. There's variations in it, but and correct me if I'm wrong at all on this, Chase. I want to be very particular about specific about how I say this, but I would say $12,000 will cover a huge chunk of, if not, the majority or all of closing costs for most buyers in that approximate scenario.
Correct. That should cover it for sure. And there's ways to use it, right? So if it's a more expensive home and you're getting, $20,000 seller credit, but your closing costs aren't that much, right? Then maybe use the remainder to have them put in a fence or put sod in the backyard or add a part of a patio. There's ways to use those seller credits, but you want to make sure that you talk with your lender first, because if you want it to go to closing costs, you need to get that dialed in and see how much of it you can use towards that before you, and then try to figure out a way to use the rest.
Yeah. Yeah. And I don't want to get too awfully aggressive here, but the topic is the cheapest way to get into home ownership. So if you play that out, you put your $4,000 earnest money into escrow, we negotiate very well to the seller to get you, a lot towards your closing costs. And let's just use this scenario where you're going through IHA and you're putting 0.5% down on the home. If you back into all that math, 0.5% down on that home was $2,000, and you got a lot from the seller for your closing costs. Yes, we had the inspection and the appraisal, but I'm not going to do the math here because every scenario is different. But my point is, we've helped folks get into a home for just hundreds of dollars.
Yeah, absolutely. It is really possible as the home prices have gone up, right? That minimum contribution has gone up. So like to your point, at 400,000, you're looking at $2,000. But when you're talking about purchasing a $400,000 home or $2,000 out of your pocket, I mean, that's pretty incredible.
Well, and I don't want to go down this rabbit hole too much, but if you're talking $2,000, and again, guys, we need to talk to you about your personal situation and what you can do. So we're just giving you a hypothetical here. We've seen it. We've helped folks do it. So it is a real thing, but it's case by case. But some folks will be like, well, I don't have $2,000. We've seen the scenario whereby, what's your rent? My guess is you're pretty darn close to $2,000.
Yeah.
And by the way, what's that?
Not too many spots that aren't that anymore here in the Valley.
Yeah. So if you play that out and you say, hey, we're going to close, we're the first of April, and correct me if I'm wrong on any of this, but the majority of times their first payment isn't going to be the first of May, but the first of June.
Correct.
So if your mortgage payment, if you don't have your rent due in April, you don't have your mortgage due in April or May, you know, you got $2,000 worth of rent. And
Yeah.
again, I'm a little concerned about speaking too much out of turn here because it is case by case, but we've seen
Right.
this play out. And I think a lot of folks are going, I don't have $2,000, but you can make it work.
Yeah. Yeah. More times than not, you can make it work. And there's they've made it really easy to get into a house. And I don't want to make it sound too easy either, because you have to be able to afford the monthly payment. You have to
Right.
get you have to get your debt to income in line. You have to get your credit score in line. With Idaho housing products, they're more forgiving as well as far as credit score. As long as you have a 620, you'll qualify, for all their programs without any additional cost.
Mm-hmm.
And so that it's not impossible to get in a home on a budget. You just have to do the work and do the research and put yourself in the right position, and then find a place where you know you can afford the monthly payment. We're not out here trying to get people house poor either, right? We just want to help them build their families wealth through real estate. And there's nothing better than tend to start with a primary residence.
Yeah, and I totally agree with you. We don't want to make anybody house poor. We don't want to stretch them. We certainly don't want them, returning the home back to the lender or anything like that. But we're having this in part because we totally anticipate and are seeing that our home values are going to go up. And they're probably going to go up fairly aggressively over the next few years if we just simply look at the supply and demand ratio that we have. We've always had low inventory, and demand is very hot in our market, and that principle in and of itself generally means increased prices and values on home.
Yeah.
So, if
Most of the time, it feels good to be right, right? We've been talking about it for a couple months, and so typically when you don't, so somebody's, I don't know, price of oil, for example, right? If the oil producing company or oil producing countries decide that they're going to produce less oil, what happens to the price of a barrel of oil? It goes up,
yeah,
right? There's
mhm.
less in supply. We haven't affected the demand. And so now the price of the barrel goes up, which affects everything else. Well, I'm going to ask you, Jerod, because I know what I've seen. How many multiple offer situations are you in currently?
Almost every transaction that I see is a multiple offer. At first it was different spots within the valley, but we're seeing it pretty consistently. Certainly, the nicer homes, meaning the ones that are, really well maintained, really well presented, really well marketed. Those for sure. We're not seeing what we saw sometimes in COVID, where everything was getting multiple offers.
Right.
But that could happen. So I guess we're just trying to state, your rent is likely to go up.
Yes.
You know, I don't know about sooner than later, but it's going to go up.
We,
If you
we, we
qualify,
saw
go ahead.
we saw rents settle, right? But we're
Yeah,
still in the same boat, right? Now that the market's picking back up, you're seeing multiple offers. It's showing that the supply is still not there. Well, our supply for apartments and condos and townhomes and rental properties is low as well. That's why they're building like crazy everywhere.
yeah,
And until all that is done, the supply is not going to catch up.
yeah.
And so all it's going to do is drive everything up in the valley.
Yeah. So the couple points that I was, going to make are that, it's pretty obvious, apparent that values are going to go up. Therefore, your purchase price is going to go up. Your rent, it might have settled out, but over time, it's likely going to go up. I mean, depending on, there's variables in that. But at least when you're in home ownership, it's pretty well fixed. There's not a lot of things that are going to go up in home ownership, certainly not the bulk of what you pay to have a roof over your head, right?
Right.
You got taxes and you got, other smaller things that can increase. But generally speaking, you're not going to have, painful, significant increases in your overall mortgage.
Right. Yeah. The payment never changes. The payment doesn't change. Your principal and interest payment does not change.
Sorry,
Right.
yes, but
Yeah.
some of the associated
The
aspects of
the
homeownership.
insurance and the property taxes can go up, but as we saw last year, property taxes can go down as well in this state. So we do see that fluctuate. We're lucky enough to see that fluctuation here because we have a balanced budget in this state. So
Yeah, yeah, absolutely. Well, we kind of blew by our our desired 30-minute conversation, but sometimes we we find a lot to talk about, and this is all very important.
I'm pretty passionate about this one. Like the misinformation that's out there about home ownership and what it costs to get in. Very passionate about it. Like to educate people and help them to understand that you can qualify to buy.
Yeah, and this was in large part prompted because of a conversation I had not too long ago with a parent, born and raised here, now raising their children, and they were super frustrated because they saw home values go up and they kind of thought they missed the opportunity to help their children get into home ownership. And
Yeah.
I think if they knew more details and especially what they could do to help them, they'd be more optimistic about, okay, yes, they've gone up, values have gone up, so you're paying more than you used to, and it is
Yeah.
significant, but they can still get in, and they're likely, high degree of likelihood, they're going to realize wealth building through an appreciating asset, which is your primary residence.
Yeah. Yeah. And oh man, that could get me off on another tangent. I probably better not say that.
Let's put a
Pin. Pin
what
in
is-
it.
pin in it. There we go. And talk about that because that's a whole nother topic, and I'm as equally passionate about it. Well, maybe not equally, but because you're super passionate, you're more that financial brain guy. But super good topic, and we'll probably have that at a later date. But let's talk about the one last, we've already alluded to, commented on, and that is what we can do as industry professionals in helping you, with the costs associated. The upfront cost, and that's the appraisal on the lending side and the home inspection. So, lenders allow us as industry professionals to contribute to a buyer's purchase.
Yeah. We're still bound to the same regulations that we talked about earlier. In the seller contribution, there's only so much that we're allowed to contribute. Like, so that those contributions go toward the transaction in total, right? So
Right.
there are restrictions on how much we can contribute, but absolutely we can contribute. That's why
Yeah.
we're allowed to make that special for the appraisal coverage.
Yeah, and on both sides, the lending side for Chase and on my side, I'd feel extremely passionate that we just got to get an inspection, and I want to. My Home Connection wants to remove any pause or hesitation in looking at the price tag for that inspection. So, we're gonna step up to the plate there, and then of course on the appraisal side, there's another cost, and Chase and Summit funding are. Well, I shouldn't speak for you, but what's your, thoughts about the contribution on that end?
I just, I think it's it's the least that we can do. I'm, kind of my heart work as first time home buyers. I'm really into, I'm really focused on education and financial health because I think it's one of the, it's probably the biggest miss in our country as far as the education that we provide our kids growing up. And so we have generations that just don't understand it and haven't talked about it. And I came from a generation, where my parents, they didn't talk about money. My parents did well. They were small business owners. And there was always things that my dad kept from me, or not kept from me, but just didn't talk about, right?
Right.
Because they're from that generation that didn't talk about their problems or, money.
Yeah.
And so I want to break through that, and I want to help everybody that I can get into home ownership, because I firmly believe it is the first step in wealth building. And so I want to help as many people as I can do that. And if me contributing a little bit helps get the deal done, then there's nothing better that could go towards.
Yeah, you and I are both in the same boat. I call it emotional currency associated to first-time home buyers. You know, these folks are, highly appreciative of the education that we provide and the help that we provide, through the process, and now this financial contribution. And you and I are very much alike in that emotional currency is way more important than a paycheck. Of course, we got to keep a roof over our head and, meet our obligations, but that
But yeah.
emotional currency is really why we're in this.
Oh, for sure. Yeah. And we do transactions for other types of people in other stages in their life that help to, help to keep the roof over our head. And so as much as we can help first time home buyers, yeah, we're in. Let's
Yeah,
go.
and we're not just making this available to first-time home buyers, but we know those folks are typically the ones that don't have the equity coming from another home, and
Right.
they just need to get into home ownership, and we're going to do what we can to help them step into that. But your second home, third home, that's fine as long as we have the promotion going. We're gonna help there as
Yeah.
well.
Yeah, absolutely.
Yeah.
Absolutely.
Yeah. Well, let's wrap this up. As I mentioned, it went a little long, but we do want to help you know how to get a hold of Chase. Just summitfunding.net, summitfunding.com. You can reach out and chat with Chase at his contact information here on the screen. You can even apply to just get the ball rolling so that Chase can set up that initial consultation and help you identify where you're at, if there's work to be done, or if we're ready to go. He'll reach out to myself and say, hey, we're ready, or hey, we got to pause for a little bit, give us a month or two, or what have you. And then we can be reached at myhomeconnection.com, our email and phone number up at the top right. And you can also, obviously, I don't know about obviously, but as you can with most real estate websites, get your home search process underway, learn about the different communities. We have a lifestyle series under Why Idaho. So if you want to, get an idea of what the different lifestyle options are, and Chase participates in those podcasts as well, sharing things to do in the area. But other than that, the perfect home buying process, just reach out to us, reference that. We'll set up that initial consultation. We'll get the ball rolling, and we'd love to help. So,
Absolutely. Always love to help.
yeah. Well, again, Chase, we always appreciate you jumping on and talking through this stuff. Our hope is that folks watching taking value out of this, getting some ideas, prompting some questions, and when you're ready, reach out to us, and we'd love to help.
Always here.
Awesome.
Always here. Thanks for having me again, Jerod.
Absolutely, Chase. Have a good one. Otherwise, we'll wish everybody a blessed one. Take care.